Right. Everyone. I think we'll be live on YouTube and Twitter as well. Thanks for joining. We'll. This is our first time doing this on multiple. I see there's no viewers. That's fine. On multiple um, channels at the same time. So we have Rosalie here from the Panoptic marketing team, and also Brandon from the research team. You may have kind of listened to the past few weeks where we had options hours. This was on Wednesdays. This is pretty good, a good way to talk to our community, but also get feedback from users. So we open it up for questions if people want to ask questions. So this is very, very cool. Today we have a special segment, and this is why Rosalie's here. So this is Stop Losing, Start Trading. This is a Panoptic 101 type of class, which is how can we trade options? There's many ways to do it. There's many strategies to choose. It could be overwhelming for many of you guys. And I'm used to it. I've traded options in retail, TradFi, and also the Panoptic interface I know very well. But the goal of these segments is to teach Rosalie, but also teach everyone at the same time that's listening to this, so that they have a good understanding of the thought process behind trading options, and also understanding that sometimes the best thing to do is do nothing at all, or to double down, or to kind of scale back. So overall, this will be very fun. We'll do it a few times a week. Again, you may expect to see these segment, or at least these live streams, be more frequent. The stop losing, start trading will happen 3 times a week. The options hour will still be on Wednesdays, and we'll have a few more things in the pipeline for the different days of the week. So stay tuned. Glad to see that people are coming in. I'm trying to see if we cannot get the Twitter chats, but overall, bear with us if there's any technical difficulties. This is our first time doing this with Restream, this cool interface. But yeah, for now, I'll hand it off maybe to Rosalie. Any comment or any expectations over the next 10, 15 minutes?
Hi, yeah, I'm Rosalie. Nice to meet everybody. I'm excited to learn how to trade options and kind of figure out a little bit more about risk management. I think a lot of people expect options to be something where you can make a lot of money or lose a lot of money, but I think it's kind of this nice in between where you figure out how to not lose money and just manage your risk. And so I'll see.
The first thing is to not lose money, and then after that, if you can say I haven't been wiped out, then you survive. There's a probability of going to zero. After that's done, if you can avoid this is great. And also we have Brendan here, I think on his phone. But yes, Brendan will be part of this for the second half of the stream, which is going to be options hours. Any comment, Brendan, on the market or anything that is at the back of your mind for now?
Yeah, we got a very anticipated Uniswap V4 launch sometime this week to watch out for. Is what we're looking. We've been doing a lot of developer testing, and the V4 was live for developers for a little bit. So we should expect some announcement on there soon that we're very excited about. We also have in the markets a lot of crazy things going on with NVIDIA and DeepSeek rising on the charts on the app stores. So big competitor to OpenAI. So has caused a lot of market turbulence and volatility.
I love DeepSeek. I can actually run it on my Mac at very, very slow speed, but at least I know I'm in control all the time, which is great. But again,
are you running the official app, or just like the actual code or whatever?
I use Ollama, so there's a way to run it locally on your machine, and there's a UI front end, I guess, for chat-like interactions. But yes, it's there's different models. One of them is very quick but very dumb. And if you want to get to the smart one, then it's like takes you 5 minutes to get an answer that makes sense. So, but yeah, we're excited. We can talk about this and the market a bit more in the options hour. For now, I'll share my screen a little bit where we'll go over the current market and the Panoptic specific figures. This is something that again we'll likely do as well. Let me see this. Let's do this. Look, much better. First off, the Panoptic TVL. has been growing steadily since we've launched. The dip we see, I think, is part of it due to the price collapsing. So a lot of our TVL is in the ETH USDC pool and ETH BTC pool. So if the crypto market goes down by 5%, then our TVL goes down a little bit. But overall, happy to see the growth. If you're kind of a passive depositor or an active trader, all of this gets compounded in that chart. This is actually pretty good. Again, we're happy with the result. We'll release the points program leaderboard soon, and you'll see a bit more feedback for those that have been in the ecosystem. But overall, very cool to see the TVL grow. The markets have been very, very interesting over the past few days. Ethereum, again, is a lot of what we trade on. Has had a small change, drastic drop over the past week. It's been stabilized. I'll talk about this in the class with Rosalie, but this type of environment, which is choppy, going up and down, very, very, very range bound, is good for options trading. It may not be good if you have bags, but there's a strategy for that. So overall, most of our users that have been kind of on the right side of risk management did well, even though there was a slightly kind of quite violent drop. We didn't see liquidations, but overall, this is a good place to be in. So market is what it is, a bit choppy. TVL is growing, and then so we can get started with Rosalie's masterclass on creating options. This was hiding my face. So, all right. So Rosalie, when we start, anytime we go on the Panoptic website, this is what it looks like. You probably don't have any account or any deposits. It just shows, and then we'll try to work on something that's a bit more attractive, but it shows nothing. There's the Discover market. This is what has been traded the most, and this is what we feature on the main website. But the first question for any options trader is, do you have a token? Do you have a stock? Do you have an underlying in mind that you'd like to trade? And this is kind of my first question.
Yeah, I would like to trade some ETH. I think I've been holding it the longest, and time to stop holding and start active trading.
Okay, so ETH. Oh, sorry, I'm shifting there. ETH is the biggest market that we have, the most liquid one. What you do on the interface is that you click on the market itself. May seem overwhelming, and I'm zoomed in a little bit. There's a lot of information here, but what hopefully is going to be clear for everyone is that chart here, which is the TVL on Uniswap that's owned by the Panoptic users. Remember, Panoptic is taking over the LP side of Uniswap V3. We also show the Uniswap liquidity, and this is kind of what it looks like now. I always make fun of it, but it's a bit misplaced. You have millions of dollars out of range here that do nothing. If you compare to the Uniswap liquidity that's owned by Panoptic, pretty much all of it is in range. There's a tiny line here, so we hope to make a dent on that TVL, but liquidity is on Panoptic. This is where people have sold options, and there might be a skew here where there's a lot more liquidity in the call side or the above. This is because the price has dropped. People may take time to readjust, or if you're still in range, you may not need to do anything. But overall, first thing you look at is the liquidity. Is it a good pool to trade in? One thing is the liquidity. If it's a new pool, there's nothing here. This looks good. Second one is the Panoptic stats, which is that area. It shows the APY for depositors. If you deposit in the Panoptic pool, you just earn yield because it's like a mini lending protocol. You deposit some USDC, you should expect 18-ish% APY. If you deposit ETH, 13-ish% APY. Both of those are healthy. This is kind of a good market. So first thing to look at is the liquidity. Second, has the liquidity being traded and what's the APY? Both of them seem pretty healthy. We won't dig too much into the utilization, but also if you want to see something below 50-ish%. So overall, this is our flagship market. This is the one that has the most liquidity. This is the first place to start. So yes, good choice with ETH. The next question, and again, we can look at the options chain. This is overwhelming for many, so we won't even go there. The next step is, Rosalie, are you bullish, bearish, neutral, going to zero? What's your sentiment on USDC and ETH?
It's hard to say, honestly. Looking at the charts and hearing everybody's sentiment about it, I think I'm still a little bit bearish, but I think it'll take some time. So I'd want to do like a monthly option, perhaps that's closer to like neutral, but
neutral to bearish.
Yeah.
And yes. And I think that's the a good choice. And again, we could look at the recent transactions and see what people have been doing, but I want to keep it fresh because everyone that comes in, they have their own intuition, they have their own kind of sentiment, and if you try to copy everyone, you're the following, and then you won't get what you want. So yes, definitely your own intuition, neutral to bearish. The time scale is the next question, but yes, are you neutral to bearish for the next 5 minutes, the next hour, the next 5 days? The monthly is where most people on the retail side should be comfortable. You don't want to be around your computer 24/7. So what you say is monthly, on average, you may have to look at it every week, and it won't change much day to day. Even in a large price move like we've seen 5%, it's not gonna matter much. So weekly, neutral to bearish.
I do think it'll turn into bullish towards maybe February, March.
Oh, okay.
Yeah. So we'll see.
Neutral to bearish next month. Something a little more bullish. Oh yeah, after that.
I think it's going down before it'll go back up. So yeah.
All right. So again, the interface is there. If you notice, we don't show the price chart because the price chart is not even the first entry point. It's still what you think is happening. So I go to the trade button here to go to the next step, which is let's create that trade that is neutral to bearish with a monthly type time scale. Again, we went from the markets page to the trade page, so it's all preloaded, but this is the market we're trading in. One thing to choose is that time scale here. So we allow weekly and monthly by default. Yeah, I'm a bit naughty. Okay, and you have also yearly options. So this is if you are extremely passive. You don't even care about the next month. It's 6 months, it's yearly. You could choose that time scale. So here we can hop between time scales, monthly, weekly, daily, hourly even. But monthly option is what you said is a good starting point. The strategy tab is a good place to start as well. So you said you're neutral to bearish. And on the option, on the strategy tab here, there's a bunch of them. And again, also up to you. If you look at the bearish row, we have short call, this is the payoff, long put, short perp, call spread. So you know a little bit about these terms, but even from the chart or the image or the green and red regions, people should kind of be able to figure out what it means. But yes, what's your first take? What do you think is a good payoff for you to kind of participate into?
I think maybe either a long put or a call spread. Maybe a call spread just to be on the safer side in case I'm wrong.
Okay. Yeah, so you click call spread. This loads a strategy on the payoff diagram. And if you look carefully, that green region and red region is shown here. So it's exactly the same payoff. The blue line is the current price. This is, without touching it, this seems like a good strategy. You are expecting the price to go down a little bit, maybe to 2,500. The most you can make, again, we can change, but about maybe about 5% on the way down. If the price is going up and you were wrong in your assumption, you can lose 5%. Both cases, they are capped. Both cases, you know what you're losing. This is a defined risk strategy. You cannot lose more than you put in. You know the max profit is $150. The max loss is $150. And as a first step, if you kind of internalize all of this, it's definitely a good trade to do. And then that's where most people can say, okay, I'm neutral to bearish, medium term in the month. This is what it looks like. This is great. And also, would you be happy with this, or would you change that strategy a little bit?
Maybe tweak it a little bit. I don't think it'll drop that far down. I think it'll only drop a little bit, and then I do expect it to go up again after. So yeah, I guess I'm hoping that I can make a little money on the ride down before I join the ride back up.
Okay, so again, the initial strategy is the default one. In the Panoptic interface, you can drag these strikes around. And this is what we can do. A lot of what we see is just kind of tailoring to what you want. And here, I'm shove this out of the way. Hopefully it shows well, but yeah, the highlighted region that you see here, it's the price in Uniswap. It's 2235 to 3600. So this is the range of your position in Uniswap. Again, people may be familiar with Panoptic and Uniswap v3. This is the range, but even without thinking, if you said you don't think it's going to go as much down, so you can increase that range. So it's only going to be in range between 2700 and higher. And that's kind of one way of doing this. You can also shrink this scale to be a bit less. It would look a bit more like that. But in that case, you can also shrink how much protection you have. You can be still quite wide. You lose $500 if it goes up. You make $100 if it goes down. And that may seem like a weird deal, but the key point is that you'll be in range in where the area that matters. If you think it's going to say between 2700 and 3300, you'll be in range in the long leg. You'll be out of range for the short leg. This is going to be kind of the state you want to be in.
Could we move it a little bit more towards 4K?
The call here?
Mm-hmm.
Yes.
I think I want it a little bit wider range.
Okay. Oh, we can widen this range a little bit and move this out a little bit as well. So,
and in that
sorry.
range,
silly music is still playing.
in this range, will I be paying fees or will I be earning fees? And how do I know?
Yeah. So yeah, I like the music actually. It's like working in coding. Yes. So this is a call spread. This is define the risk. This is a conservative strategy. This is the payoff. But then you have to understand how the dynamics of Panoptic work and Uniswap works. What you're doing is that you're buying that range, and I'll put it a bit out. So you're buying an option that's currently out of range between 3,300 and 5,300. So you buy that liquidity. And if you're in that range, because you're buying, you pay a fee at every block that happens. So currently, you could buy this option for free. You don't pay anything because it's out of range. So this is a good strategy. On the other side, you sell an option. This is where you earn a fee when you're in range. And in that case, and I'll try to put it where it was, if you're between 2,700 and 4,300, you earn a fee. So that type of trade is fantastic given the condition and given that there's liquidity that's out of range, because you can buy an option for free, use that liquidity to move in range. So you displace or you move someone else's misplaced liquidity to be in range. You earn all the benefit. They don't earn anything, so they're a slip and a switch. That's fine. So in that specific case, you'll be earning fees purely as long as you're in that range that's here. So this is a very, very good and attractive trade because you're getting an option for free and you're doing it to move liquidity in range. And at the same time, the buying power requirement, meaning how much liquidity do you need to make this trade possible, is very, very small because you're removing liquidity from one place, putting it somewhere else. You don't borrow much. You just actually move liquidity, so you can get up to 10x leverage on that position, or it could be a bit more as well. So this would
awesome.
be cool.
I guess I learned from the best already. So
yeah. So again, the whole process for options is: what's your directional assumption? Do you want to be paying or earning fees? And do you want to have unlimited upside, where you can make 10x? This has a cost, so you pay. Or you want to have unlimited downside, but this has some benefit, which is earning fees. So this call spread is the best of both worlds, especially for a retail trader that's the beginning. You know your max loss. You know the most you can make, the most you can lose. You just construct it so that it's in range, and it's actually fairly straightforward. So I'll actually, this is a link that you can create now on the Panoptic interface if you were to log in yourself. So I'll try to see if it's possible, but I can paste the link and you guys can actually do the exact same trade that I'm doing there. So that link here, yes, app.panoptic. So I'll find a way, or maybe I'll paste it in the Slack so that Brennan or Izzy can paste it somewhere else that's useful. But that trade that is that Rosalie has been creating is something that anyone can go through the same process. We're in the US, we cannot trade it. Unfortunately, you listeners may not trade it, but you can copy trade if you want and create that same one. So that link, as easy as clicking on it, is going to load that page with all the right information loaded in. The next step is that you have to choose how big your position is going to be. And let me go to this one. How big your position is going to be. And this is also a matter of preference. So currently, this is a 1 ETH contract, meaning that you remove 1 ETH from one side, put 1 ETH another place, controlling $3,000 worth of notional. The size that you trade is dependent on your own portfolio size. But at the end of the day, 1 ETH is maybe the minimum size that you want because there's some gas. It's mainnet. I know. We can go on layer 2s, but we want to make it work on mainnet first, and then we can move to layer 2s. But 1.5, 2 ETH would be a good size for this. Rosalie will be making that trade magically, or maybe some offshore entity, and then we'll maybe track this week after week. But as a first trade, this is a great start. I pasted the link. We can revisit this. Unless the price does move, it should be good for the next month. And the key point is that once this is established, then you can actually monitor it, close it when you think it's fine, or keep holding it. And the best case scenario actually for that type of trade, you don't want to see the price go up. You don't want to see to get exposure and get into that range where it's paying a fee. You want to see the price go down because this is her assumption. So if the price were to move from 3,100 now to less than 2,700 and be in that flat space, this is the perfect time to close that position. You start in range, you earn fees, the price moves, so you earn some actual gain because you're shorting the ETH in a way, but you gain some profit here, you earn fees on top of that. When it's out of range, then it's time to close it. So I would see that if Rosalie's right, and over the next month it does move, that's a perfect trade. If she's wrong and it moves the other way, there are ways to mitigate it, and this is kind of the thing that we'll be covering. So amazing trade. Should set aside your directional assumption. So
and should I still be looking into this every day, or maybe do I have to watch it as closely as I do when I'm holding?
So it all depends on these timescale. So in your case, if it's a monthly option and you don't hear bad news that the price of ETH has crashed, and you should not be watching it every minute of every day. Once a day, once every couple of days is definitely fine, and you don't have to manage this. It's like it's a long-term trade. If it's a monthly, you have to at least hope 2 weeks in is going to be where, if you're right, you're right. If you're wrong, you're wrong. You'll know if you need to keep it down or close it. If it's, again, we can change all of this and do a weekly option, daily option, hourly option. If you're extremely confident you can do an hourly option, and within an hour, maybe the Fed announcement makes it true, then in and out in a quick way, and that's fine. But yes, since this is a monthly option, you actually are perfectly fine watching it every day. And I'll this is the options chain. This is for those that may know a bit more. We are selling the 30 delta call and buying a 0 delta, which is out of range call. We show the deltas on the options chain. We show also the open interest is good. We show, this is a bit advanced, but there's a vol surface, and we show the vagoid, which is how much more you earn. So technically, Rosie will earn more from the fees by that option being in range, but that's something for another day. But yes, and if you were to watch other people trading, now you can take a peek and say who else is participating in those strikes. This is a bit more advanced. We'll cover this, but for those that are listening and know the basics of Panoptic, you can say, oh, I'm buying this option that this person sold. Someone else is buying it at the same time. I can actually look around. Are they liquidatable? Is it a whale? Is it a market maker? Is it fun? And in that case, I can click that person's portfolio and even spectate and peek at them. Oh no, they lost some money. But at the end of the day, it's just going to be kind of all permissionless and open. You can see it. So next time, John, there's going to be positions. This is that person, that other person's we're spectating portfolio will have one position, maybe two for Rosalie. So
I can look in there and see if there's any more out of range liquidity and move it in range again.
Yes, and typically the sizing, you want to create a position that is no more than 10% of your portfolio value. So in terms of capital requirement. So again, it's a weird concept, but you were very capital efficient with that spread. So even if you have 1 ETH of collateral, you can create a 1.5 ETH option and still be kind of close to the 10%. But yes, the sizing is important. But the key point is that each position should not overwhelm your portfolio because you want to be able to capitalize on new opportunities. If you're all invested, you're kind of stuck and cannot do anything. You need to keep cash, I guess, around. In the world of options, is the buying power requirement. We want this to be about 50% utilized, meaning that you have some collateral, stocks, cash, bonds. 50% of your buying power is utilized. The rest stays as cash. You may want to go to 60% after a price move, or may want to scale back. But you just have to have this freedom, which is something that is useful for any traders, options traders.
That makes sense. Yeah. I'm not going to put all my ETH in there.
Or you can be a passive LP and earn a yield. If you have ETH and USDC, I'm going to quickly go over the markets, but the first trade was ETH. We may not have time to create a Pepe trade yet, but next time maybe. But the key one is that if you have some ETH and USDC lying around, you can earn a yield by being a lender to those pools. Pepe has 2%. It's not traded much, but as trading picks up, you can earn yield on your Pepe. Now it's 18% on your ETH USDC, BTC as well, 12%. The whole thing is kind of a lending protocol on top of a options protocol on top of Uniswap in a way. So it's a very, very integrated protocol. So I think that's good. We try to have this be 15, 20 minutes, not too long, but by piecemeal lessons for the audience, for the users, for Rosalie, and then we go from there. So again, we'll be in touch. Keep watching this. Keep an eye open. We'll have those likely Monday, Wednesday, Friday, and that could be the pace at which we even trade. There's no point in trading every day. And if we wait 1 or 2 days, if it's a monthly type of time scale, it's actually fine. So, all right. How was your experience, Rosalie?
Good. Yeah. That seems very easy. And I feel like I maybe made a good decision. So we'll see about that. But I prefer to kind of understand where, things end and are capped so that I don't, do what I usually do and ride random meme coins to zero. So I'm feeling a little bit better about
and definitely I think and that's fantastic. And I think the main message that the Panoptic team is going to be kind of sending out is that GameStop and meme coin buying call options is maybe fun, but very, very hard to make money with. You have to be on the risk management side, on the sell side. The defined risk strategy that we created was perfect for this. We could be buying a call spread as opposed to selling one. It changes the dynamics, but at the end of the day, being defined, being on the right side of the casino. You don't try to beat the market. You want the market to beat you, which is let me show you how long I can stay in range, because the price is what it is. If you're in range, you make money, so you don't care that much about the details. So fantastic. So I'll bring back Brendan, and then we'll go over the options hour part, which is kind of discussing the daily or weekly events, the trends, what we see in the markets, and also open it up for questions. And I'll have to figure out, this is a new way, but we'll have to see the way to get questions, either YouTube or Twitter. Maybe someone will relay them, but at the end of the day, feel free to ask questions as well. This is kind of the reason we do this, to get in touch with the community. But yes, thanks a lot, Rosalie. And I'm
Thank you.
reviving Brendan. Yes. All right. See you in a few days, Rosalie. Bye-bye.
Yes, please comment on the live broadcast here. We're on Twitter and YouTube. You can just comment directly. There is kind of a delay, between when you comment and when we receive it, but we're happy to answer any questions here. Yeah. So
How did you feel
welcome
about
to
that? How did you feel about Panoptic 101? Do you want to trade call spreads, or are you more bullish?
Yes, it's very helpful. I love love the walkthrough. How we can see very detailed how your mindset is, because I think that there's so much knowledge being imparted from you, which is very helpful for us 3Ps brains to comprehend. So
Trading
as
is for
far as
everyone.
yeah.
Options for every market and for everyone. There's a strategy, whether you're a big brained, you want to do extremely sophisticated. Maybe you make 5% more than someone that is pretty good, knows the mechanics, knows when to get in and out, doesn't need to know about all the math and the Greeks, but they actually get it, and they can actually maybe even outperform the quant. So yes, definitely.
Yes, very different mindset.
Yes.
So yeah, no math there. I like that. It was great. As far as the markets are going, I mean, personally, I don't know what my take is, but we're down, quite a lot from the weekend here. I'll just report kind of the simple stats here on the macro level. S&P 500 since Saturday, since the weekend, down almost 0.5%. Nvidia down over 15%. Bitcoin's down 2.5%, and ETH a bit more, down 6.5%. So, I mean, there's been a lot of good news and bad news. So on the good news, SAB 121 was repealed by the SEC. Big win for crypto, I guess, with the whole banking stuff and custodying of crypto assets. But it was short-lived with the big dip in the macro from DeepSeek. And so here we are with the current market. Bitcoin's trading at about 102K right now. So
yeah, no, it's definitely, that's right. The goal of every startup founder should be to create a product so good that it tanks the U.S. market and removes billions of dollars worth of liquidity from the market. I like it.
Yes, billions. Was it? Yeah, billions of dollars from Nvidia's market cap, which is overnight just wiped out all the VC funding.
I mean, I'm sure the AI agent field will maybe even be a bit easier to get into. You can run this locally or on your own server, but in a way that is good. I don't add a lot of weight to AI trading and AI agents, but overall, it just kind of makes it more accessible, which is kind of where AI is going, in my opinion.
Yeah, I mean, you see this trend. Most market participants are AI at this point on most markets, and if it's not for early markets, it's the trend is always to increase. And so, Panoptic traders right now, I think there's like 150 unique wallets or something. I don't know, 5% are bots. But in a year, we expect that number to be much larger.
There's a big debate, though, right? Again, I'm of the opinion, and this is me coming in as a physicist, it's a random process. The whole thing is pretty random. The market may not be as efficient as it could be, and that's just a matter of getting sophisticated participants. But as more and more of these get released, there's no alpha. It's all pretty much a random process. Someone picking a number out of the hat or a extremely sophisticated LLM, it's all going to be the same. You just have to hedge, probably. You just have to play, I guess, the volatility is a signal, but the direction is definitely not something that I would trust that any bot-based trading will kind of be in the long term, beating either humans or someone that has a fairly more conservative, but then kind of higher probability of profit type of approach.
Yeah, this is an interesting point about, coming, I think, from your physics background and the market prices being random walks. And so I think you were mentioning how you don't necessarily day trade. maybe you're just saying in the example that doing a monthly trade. But there are a lot of day traders out there speculating on the price, and I think kind of the academic consensus is that the price direction is a pretty random coin flip. Maybe you have some special like maybe traders have some special insight. But
I'm probably going to repeat this quite often, but the first realization that any options trader has to internalize is that it's random. There's no mastermind guiding the market, or there's no alpha that is kind of quite the selected few have it. You guys are on the other end. No, it's all random. There's no way to predict it. You cannot predict the weather 2 months from now. You cannot predict the price 2 months from now. It's equally even more random because it's a single process and not. So at the end of the day, once you internalize this, you play the probabilities. You play not necessarily the direction, but actually the market frothiness, the volatility itself. So the volatility could be expanding, contracting. This is prime trades that you can do. But if it's expanding, it can go either way. It can go up or down. Same thing with again, we'll know in an hour and a half what the Fed announcement is. Even if everybody expects, I saw a tweet, but everybody expects one thing to happen, the market will move regardless. And even if I tell you something else will happen, there's no way to predict. So at the end of the day, internalizing that the short to medium term is fairly unknown and unpredictable. Long term, there's always positive drift. So you can still buy and hold and be fairly certain. But at the end of the day, the time scale for options trading is from a few days to a few months. And this is a sweet spot where you can look at global trends. You can look at volatility expansions, like COVID spiked. It took 4 or 5 months to go down. Even though the markets were recovering, this volatility was high. The volatility is a better signal for options trader because it tells you how wild and how random it is without telling you about the direction.
So yeah, lots of good, interesting points here about. So like as an options trader, the mindset should be directional. In the short term is random, you're saying. Whereas in the long term, maybe there's some positive drift that is, markets tend to go up over time, at least for the overall markets, S&P 500 and crypto at least. But then, so if volatility should be the signal for options traders, my question for you is, like, volatility is a number, right? Let's say it's 50%. It could go up from here, down from here, or stay the same. Is the volatility process also a random walk, or is it because you're looking at a longer time scale? There's also a positive drift, or is it mean reverting? Do you think it has the same process as kind of just the regular price?
Yeah, so it's random, it's unpredictable, but the trend is that it's mean reverting. Volatility is traders trading. At some point, they run out of steam. So typically what you see is a huge spike of volatility. COVID dump, 2008 crisis, everybody sells. Lots of trading that happens. The more days that go on, the less trading there is. So the less volatility or volatile the markets will be. But it's going to typically it relaxes back. There's huge spike. These spikes are impossible to predict. When they happen, typically you want to maybe capitalize on those or do nothing because it gets to go up. But it spikes, and the longer time trend is always on the downside. It's going down. There might be other spikes, but you can imagine that the all-time high of the S&P 500 is unbounded, meaning that it can be 10 times more in 10 years. And people will say, yes, it's possible. You cannot have 10 times the volatility and be sustainable. It's a different kind of part of the phase space. So in that case, spiking and relaxation. This is a little bit what option sellers kind of capitalize on, but even then, it's not easy. But the key point is that volatility has some structure that is distinguished from what you have in price action. And again, it's mostly random spikes where you can get killed if you're not prepared, and slow drawdowns that may take, again, 3 to 5 months to kind of realize themselves.
Interesting. Yeah, this is probably pretty new for a lot of our DeFi users, just used to trading perps and it's going to go up or down. But this is pretty fundamental shift in mindset. It's not the price going up or down. It's the volatility going up or down. So as you said, the volatility spikes up because, I don't know if it spiked up, but because of DeepSeek, let's say, then you sell options, right? And then the volatility is at all time or just the normal low. This is when you can buy options, I assume. So same
Yes,
thing, buying and selling, but you're trading volatility, not the price, right?
exactly. And the momentum is on the upside, and the kind of the decay is on the downside. But yes, the I don't know about the perp funding rates, but the funding rates might be, if you were to plot this over time, a bit more like volatility as well, meaning that it's constantly negative for short, but for long, but at some point it flips and this reverts. So I would expect that. I'm sure people are more knowledgeable than me on that, but yeah, the same way that funding rate in perps is unpredictable, but you have some bounds to it. It cannot stay 1,000% forever and kind of keep going up type of thing. Same thing with volatility.
Yes, indeed. Yeah, you see big spikes when probably correlated to the big spikes in volatility, but there's definitely other factors in the first market. Speaking of futures, yeah, so back to the markets. Fed, the interest rate futures markets were pricing in about a 1% chance of any rate cut or rate change. And so basically there's very low probability that in an hour and 20 minutes here that the Fed will announce any change. There has been a lot of, let's say, political talk about influencing the Fed to do certain changes based on the president's wishes. Interesting enough, but yeah, I don't. So you said you think the markets will move anyways, even given the kind of expected
I mean, I think
no change.
there's nothing certain, and even if it's 0.5% chance, it's still there, and it's. I mean, if I were the Fed chair, I would like purposely do the most unexpected thing just to stick it up to whoever wants to control them, establish their authority, and say, "No, you won't push me around. I'm doing the opposite." So, but yes, I would say that it's a distinct, like 2:01 p.m. There's going to be a distinct shift, but everything else, like there's a dislocation after that, it stays the same. So could be a small, could be a big one, but typically there's a before and after type of market shift. So that's the thing. You flip a coin with a million faces, and that determines how wide you move, but afterwards you just keep the same dynamics.
Right. Yeah. So I mean, the way I set the question was tricky, but I think yeah, they're probably, people are listening not just to the rate change, which probably won't go in, but what the kind of way that Jerome Powell is going to stick it up, or what they're signaling about the future rates,
yeah, exactly.
as far as their outlook. So it's very much mind games as far as controlling inflation, and all they have to do is say what they plan on doing.
If they look like they're rolling over and then listening to Trump, then that sends a huge signal. If they look like they want to fight, different signal, and they probably have to toe the line. And are they too aggressive, too meek? This is going to be what determines that shift.
Interesting. So yeah, I guess watch out for that if you have any option positions open right now.
And again, the without, so back to Panoptic, the key, there's a trade that you can do that capitalize on these kind of one-off events. In TradFi, you have earnings, and these earnings are actually a pain in the ass to trade in if you're kind of trading. It's also unknown what happens. They come in every quarter, so some assets spike in volatility, huge collapse afterwards. But even if you position yourself on the volatility trade, you can sell straddles, for instance, but the price move could be so violent that you would lose even though the volatility collapses. So a lot of what I personally do is either stay away from those and capitalize on the next few moments to kind of put on a trade. Or if you want to be capitalizing on it, you get this calendar spreads, there's defined risk strategies that have some built-in volatility component, like a Vega that's kind of negative, where if the volatility goes down after the event, you can profit in a way that's bounded in terms of max loss. But yes, the nature of crypto means that we don't have that many of these one-off events. Opening and closing times are extremely wild in TradFi. It's 24/7. But and so you expect it, that at 9:31, you have to be in front of your computer to do something. In crypto, if random event happens, it's 24/7. You don't know, you cannot anticipate it. So maybe that makes these moves even more violent. So yeah. But yeah, I would say calendar spreads is something that people do sometimes to capitalize on that. Iron condors, which is something that has defined risk priority, but is short Vega as well can also be something you use. But yes, I've some people can trade earnings. I think Nvidia, like a year and a half ago, they kept on winning and winning and winning. Every earnings was like 10% up. And then at some point say, all right, it's the fourth time. Maybe this one's going to go down. But no, you get pushed. So again, I got burned on earnings on Nvidia. So I'm staying away from those.
Yes, interesting. So yeah, I guess past doesn't determine the future. So what about just I know a lot of simple option trades is just the earnings call is coming up, the Fed's rates coming up. Let's buy a really cheap option, right? Just out of the money option. I see right now on Panoptic, I can actually buy an out of the money call on ETH, pretty far out of the money. Unlikely, that it jumps, 1,000, let's see, dollars right now. But you could buy, a somewhat deep, somewhat out of the money call option for relatively cheap. Is this? Yeah, I guess. How do you feel about this kind of buying strategy?
I'm gonna share my screen as well to actually show the audience what we mean. But yes, in the interface you can buy options or sell options if you're bullish, bearish. Buying a call option, you can move it around to get the payoff you want. And in that case, this is a out of the money option. The strike price is 41.71, and the range is between 3,200 and 5,300. So that position, if we're to buy it, will start making you money if the price hits maybe 4,000, 42, 4,500. If it shoots up to 6K, then you make, 100x on your investment. But if it stays inbound, if it's actually moving back and forth, you can actually end up paying a lot. So even though it seems like this unlimited upside potential seems very attractive, it's only when you hit the 5, 6, 7K that you are really in the money. And most of the time, you may be kind of range bound here. So same thing if you have something that's closer to the money, you may be paying right away because you're in range, but you have what it's called a higher delta. You tap into that increase much quicker. And maybe, let me try to show this. But here, it starts to pick up when you're kind of halfway through. Whereas if you start somewhere closer to the middle, it's going to start to pick up a little bit more readily, which is kind of right away. So call options is one way to think if it's going up. You can create put options. You can create straddles, which is kind of long straddles, which is this omnidirectional play. No idea where the price is going to go. I know it's going to move and move fast. That's another play you can do. If you look, if it's above, 4,000 or below 2,600, then you can make money. And that's again a valid strategy, but it's all about the cost. So again, something for everyone. No one will prevent you from trading those, but remember there's someone on the other side. So if you make X, someone else loses X, you make X, it's all netting out to zero except for the fees that you pay. So on the buy side, you pay a fee. On the sell side, you get paid. So it's zero-sum game on the amount you make, except that the fees transferred give a slight edge to the sellers.
And there's actually an interesting difference here between the perpetual options you're showing and the regular option. That is, someone is selling you a 4,000 call option right now, which is on Panoptic is free if you purchase because it's totally out of range. So the trade-off here is it's a free option right now, but if the price actually goes in the direction you want, it will start accumulating what we call streamia, right? So that streamia will actually pick up as your bet gets more and more correct. Whereas, yes, but the nice thing is you start off free, so
yeah, I know.
The price goes down, nothing happens.
I don't want to put anyone in the spot, but we can look at one specific example of a call buyer. Hopefully,
let's put them in the spot.
Yeah, no, it's a random wallet, offshore for sure. This person purchased a call, and they purchased it 20 days ago. And unfortunately, the price hasn't moved much. It went down actually against their directionality. So it's a small position, but they're paying 3.5%, 3.4% already in the premium. And again, 3% over 20 days. If you're right directionally, it's a drop in the bucket because if it goes up, they make 400% more. But if it stays down or if it stays range bound, this is how it accumulates. So there's always a trade-off. we had quite a few liquidations already, and it was mostly people buying options and being either a straddle or a call, being wrong directionally because the price went down, but still staying in range. So you lose a little bit on the price movement going down, but also at the same time you pay a bit more. So a few people got into a large position, call option, thinking that price is going to go up, price went down, fees went up. They got to a point where they had no collateral left. They had to be liquidated. So again, a thought on both sides.
Yes, and just a reminder, nothing we say is financial advice here. All
Yes.
just armchair trading, right? So, but if you buy totally out of range, totally deep in out of money call on Panoptic, and the price goes down, it doesn't drop. It's only if you're partially out of the money and the price goes goes down. It drops.
So again, the rational thing to do is to not sell any positions out of range because you sell it for free. But if that is recently went out of range, then it's definitely kind of fair game to buy it if they haven't kind of stopped. So at the end of the day, that could be prime options buying opportunity. I personally would try to close these positions unless you think price is going to go back up. But yes,
maybe.
A free option. You can think of a put option that you never pay unless it actually is used. That's like a new thing that we can do with perpetual options.
Yeah, and I think the users right here on Panoptic are a bit more active than the ones on Uniswap. As you showed, there's a ton of out of range liquidity on Uniswap. Here, there's just a couple at the 4,000 strike. Most is still in range, earning Streamia, earning points on Panoptic. Yeah. But so maybe these users are expecting the price to go up a little bit, or maybe just with the recent drop because it was only like yesterday or whatever that we saw the huge crash on the market. It started on Saturday, but when the markets opened on Sunday night and Monday morning.
And if you go back to the segment with Rosalie at the beginning, what we were doing is moving liquidity that was out of range closer to being in range. So again, this is the Panoptic liquidity, and she probably moved some of that liquidity that stayed kind of all the way out. But if you look at the Uniswap liquidity, this is kind of, if this was sold in Panoptic, anyone could buy that out of the money call option for kind of quite a bit of upside, or call spread sellers like Rosalie could be buying this, moving it closer, relocating these passive users that may not be kind of choosing the right range. And that's kind of efficient market. If you see liquidity that's displaced in Uniswap, it's locked forever. In Panoptic, you can actually move it and leverage and move it. Again, tens of millions out of range. And these wider ones, it's a flat thing, but it's probably like wider range. But this one, there's no excuse. They should be moving closer, going wider, or at least allow this to be purchased and moved closer to the money.
Yeah, and a lot of people say these might be limit orders, or they're just parking their capital. They need a place to park.
Yeah, but they miss out on fees. They could be earning like, especially now with the price moving back and forth, like 5% already on your 5 million. It's not negligible. It's actually pretty good, but yes.
Yeah, and I mean, there's minimal smart contract risk V3's been out, but it's kind of expensive to risk-wise to just park your $10 million in a smart contract.
But yeah, with Uniswap V4, I'm sure there's a lot more diversity. But yes, the same story may play again. Maybe again, we will be launching on V4. Panoptic works on Uniswap V3. Quite easy to make it work on V4. So when V4 launches, we'll be able to create these hooks, these options market on top of any hooks. Help liquidity providers for any hooks. Again, if you have a swap specific hook that maybe help you do TWAP, liquidity managers still need to exist, so we can help with that. The interface will be upgraded to show the Uniswap V4 pools. The trading experience will likely be exactly the same because it's still moving liquidity around.
Yes, very, very anticipated upcoming launch, so stay tuned for that V4 and Panoptic on V4 launch. We also have Grow coming for the easy passive LPing experience, and right now you can deposit, but the whole Grow interface makes things very simple to earn points on Panoptic And what it is you're just lending out funds to LPs. And so it's a whole on-chain market making operation platform that you can become the source of funds for LPs and earn passive yield. I think lifetime earnings on these pools are around 17%, let's say, on single-sided USDC and ETH deposits. Right now, I think the more sensitive yields have kind of dropped to around 5%, which compared to 2% on ETH staking, is more than double there. So, but yeah, so stay tuned for these announcements coming. And we had another piece of kind of research drop, which was the loss versus Panoptic. So LVP. Maybe you've never heard this. It's the I guess, yeah, Guillaume, actually, why don't you describe what is loss versus Panoptic since you coined this?
Yeah.
This term?
And again, I don't want to bring the interface again, but when you sell an option, you're depositing liquidity in Uniswap, and that's kind of exactly the same returns, exactly the same position. But if someone buys it, could be Rosalie buying a position, could be someone buying a straddle, they pay you more than the fees, meaning that your returns on Panoptic, if there are any buying activity or buying demand, will be strictly larger than Uniswap. You still have Emperor net loss and gamma risk, and kind of if the price moves the wrong way, you still lose. But the fees generated will be strictly larger. So it's a play on LVR, loss versus rebalancing. But loss versus rebalancing assumes that you are kind of balancing every block and you compound these losses every block. And you want this compounded effect to be less than the fees earned. Currently, it seems that it's more than the fees earned. So if you were to do this fancy rebalancing, the fees aren't enough to compensate for your position. But with Panoptic, because buyers are willing to pay more, and the piece was that historically, across all positions, they receive 22% more than Uniswap. So at the end of the day, the multiplier, meaning you sell an option, the part that's purchased is paying you more, so 22% more. So that flips the balance, meaning that yes, LVR is this extremely complex formula, but it's giving you a loss. The fees now are higher, even more to compensate for that. So as a Uniswap LP, there's the loss versus rebalancing, which is extremely sophisticated, perhaps, that uses DEXs to rebalance. There's a loss versus Panoptic, which is being passive, just choosing the right position, positioning yourself to sell an option that someone wants to buy. And that's going to also create a delta on your return. So there's two positions parallel for the beginning of Panoptic. All LPs earn 22% more than the same holders on Uniswap. So that's the LVP.
Thanks. Yeah, and there's a big difference to point out between LVR and LVP here, because LVR is saying if you had, instead of LPing, you had gone and held this basket and actively rebalanced it, every second or at least very often, then you'd be making, let's say, 10% more or whatever the estimate is, somewhere around 10%, right? And so the difference is huge. It's one is your passive AMM LP participant versus rebalancing constantly. Whereas in LVP, when you're comparing the loss on Uniswap LPs versus Panoptic, it's really the same thing. You don't have to be any more active. All you have to do is deploy into Panoptic's contracts, and it's the exact same position, same price range, same thing. It's getting deployed in Uniswap. It's just that there is a lockup time if someone buys your option, right? And so that really is the biggest trade-off. Is maybe you have to be more passive. You can't unlock your LP position, but 22% gains, so big difference.
Exactly. And then the opportunity cost is that, yes, you cannot close all your position. You may be able to close it only partially. And that is one cost. But the key point is that the buyers also have a different kind of risk profile. And they can say, yes, I can pay 25% more. I don't care because I think I'm right directionally, or my straddle is kind of cheap. So it's a extrinsic feed into the kind of Uniswap LP swap fee type of ecosystem. You have these external traders that funnel money into LPs because they have a different viewpoint. They have a different view. And again, buying a call spread, you're still a buyer, and you also have an assumption, but you can say, okay, I'm paying even 50% more for that call, but then I'm moving liquidity closer and I can make net positive. So again, all about trade-offs. The innovation of Panoptic is that it adds this extra player, which is the buyer, to fund, create more returns. They have an edge they think they can pay, or they want to hedge their portfolio. Again, by the time we have a lot of liquidity, you can buy millions of dollars worth of put options. This is why in TradFi puts are extremely purchased in terms of risk management. They're also okay. It's like an insurance policy. Again, you want to buy fire insurance, and you want to pay as little as possible, but you don't care if it's you don't just want to get used to. You want to use the insurance, but rather just pay as a way to kind of have a peace of mind. So it's a similar thing with options. So
Yeah.
long story short, yes.
Yeah. Go ahead. Sorry.
No, that's fine. We tried to keep this at an hour, so I was going to kind of wrap it up. But yes, last comment from Brendan, and yes.
Yes, sorry to put you all to sleep, but no, I think this is a big point you made about option buyers coming in and being willing to pay more than option sellers. I think a lot of the LPs on Uniswap are not thinking directionally. I don't think they're thinking, hey, I think the market's going to go up a little bit, so I'm going to LP. I think they're thinking, I hope the price just doesn't move, and I hope I get a lot of fees and maybe some liquidity incentives or something if there's some mining programs. And so like, yeah, so if that's your mindset when you LP, it just makes sense to put it into Panoptic and earn on average 22% more in fees than you're earning, right? If you're making $100 in fees every day, you're making 122 on Panoptic. And from the buyer's perspective, I think a lot of option buyers that come in Panoptic are not thinking in terms of, oh, I want to earn some yield, I don't want price to move. I think they're thinking very directionally, at least in terms of volatility, that, hey, the price is going to drop a ton. I'm going to short this LP position, which you can only do on Panoptic. And it's basically buying a put option. If the price drops, my put goes up and I make money.
The put options buyer made a lot of money over the past few days. If it goes down, there's also a strategy for that. So again, and you short the token in a way that doesn't impact the market as much. You act on this kind of liquidity provisioning side. The seller of that put maybe is losing money, but again, the fees hopefully make it worth. But yes, it's again, with Rosalie's class, with these option hours, we'll do kind of a few more shows throughout the week. It's just kind of to give you guys a flavor of what options trading is. It's not for everyone. It's not something that your grandma should be doing, but you guys being sophisticated degens, it's probably, you're primed to understand this. But it's a different way of trading. It's not swing trading. It's not yield farming. It's a little bit more, requires a bit more finesse, but you can also control the parameters much more easily. So yeah, excited.
Well,
so again,
awesome.
I've been trading a lot myself. Excited to share the insights and have you guys also try it out and ask questions. Of course, Discord on the YouTube feed as well. We'll try to get the Twitter feed as well questions up. But yes, overall.
Great. Well, it's been a great options hour. Make sure to check out app.panoptic.xyz to follow those trading strategies that Guillaume taught us today. And stay tuned for some upcoming announcements. We're very excited about what is to come. We've got points programs launched right now. So early depositors, early traders, you're going to be making a lot more points. So go check out the two markets right now eligible for points on app.panoptic.xyz. It's the ETH USDC 30 bips and the Bitcoin ETH 30 bips markets. You can single side lend or you can trade options and get points. And as usual, we'll be having options hour each week, Wednesday, the normal time. But stay tuned for more content and we'll be hopefully doing this live stream more here on Twitter and YouTube.
Amazing. Yeah, go trade that ETH BTC ratio, the flippening. You can now trade it. So there we go. All right. Thanks, you guys. It's been a pleasure. See you next time.